When you are standing in line at the grocery store, staring at a low bank balance, or trying to avoid a massive $35 overdraft charge from your bank, cash advance apps look like a modern financial lifesaver. Promising zero interest, no credit checks, and instant access to quick cash, platforms like Cashli position themselves as an accessible, friendly alternative to predatory payday loans. But after using Cashli and looking under the hood of how these microlending fintech tools actually operate, there are several crucial realities that marketing materials won't tell you. The biggest misconception people have when downloading Cashli is assuming that instant approval is guaranteed. The app advertises no credit checks and no social security number requirements, which makes it seem like anyone can sign up and instantly get $150 deposited into their account. However, Cashli relies heavily on automated algorithms via Plaid to analyze your connected checking account history. If your regular deposit patterns fluctuate, if your recurring direct deposits are slightly irregular, or if your average daily balance drops too low, the system will quietly deny your cash advance request. This brings up a major frustration that traps thousands of users: the monthly subscription fee. Cashli charges a recurring monthly membership fee, typically around $3.88 to $4.88 per month to use the platform. What many people do not realize before signing up is that you are required to enroll in this paid subscription before the app even calculates your cash advance eligibility. That means you can pay the subscription fee, link your bank, and immediately be told you qualify for a $0 advance. If you aren't careful, you end up spending money for a service you cannot even use, creating an added financial burden when you are already tight on funds. Another detail users wish they knew beforehand is the reality of advance limits and cooling off periods. Even if you are approved, first-time users rarely get the maximum advertised $150 limit. In practice, initial advances usually range from $25 to $40. Furthermore, once you repay in advance, Cashli often enforces a cooling-off period lasting anywhere from 5 to 7 days before you are permitted to request another advance. If you are relying on recycling that cash advance to bridge a temporary gap until your next bill is due, this waiting period can completely throw off your budget. Repayment timing is another critical area where fear and reality collide. Cashli automatically schedules repayments to coincide with your expected payday. If your paycheck arrives a day late or your bank takes longer to process incoming funds, Cashli's automated system may still attempt to pull the funds from your account as scheduled. Instead of preventing an overdraft fee, the automated deduction itself can trigger an overdraft fee from your bank. There are also regional and state regulatory limitations to keep in mind. Due to strict state lending laws, Cashli and similar cash advance tools have pulled back operations or altered features in several states, including Connecticut, Maryland, Nevada, and Washington, D.C. If you relocate or live in a state with tighter consumer financial protection laws, you may suddenly find yourself locked out of advance capabilities altogether. To use Cashli or any cash advance application safely and effectively without falling into a cycle of debt, keep these actionable takeaways in mind. First, test your bank account compatibility before paying anything. Check whether your primary income source is categorized as standard direct deposit by Plaid. Gig work, transfer app deposits, or irregular cash deposits are far more likely to trigger immediate advance rejections. Second, treat cash advances as an absolute last resort, not routine income integration. Using micro-advances every pay period creates a continuous shortfall in every subsequent paycheck, locking you into a loop where you are perpetually borrowing your own future earnings. Third, manage your subscription actively. If you are denied an advance or decide to stop using the service, immediately cancel the monthly subscription inside the app and unlink your bank account. Do not assume that uninstalling the app stops recurring billing. Finally, keep an emergency buffer in a separate account dedicated solely to avoiding bank overdrafts. Relying on software algorithms for emergency cash leaves you at the mercy of sudden policy changes, app downtime, and automated rejection algorithms.